Good morning. This is Simon doing the market preview for January 14th, 2020. Okay, so a couple things I want to cover here real quick before we set up the profile chart. So number one on CL, I got caught out yesterday. This was the place where there was support, right down here in this 57 to 57.60, and I kept trying to catch reversals. And it's been a while since we've been in this position, but notice that, so I didn't catch it. I just mentally kind of fell asleep, so I apologize. But we've been trading underneath prior day's value consistently, right? And while we did have a balanced day on Friday, we opened up underneath value yesterday, and we held underneath value, and we ended up doing a long liquidation, and I got 3 stops. Now, something I want to talk about that's important for the guys in the room. So this is a human endeavor in a highly technical field, right? I want to say that again. This is a human endeavor in a highly technical field, right? So you're going to make mistakes. So you need a fail-safe to keep you safe. Now, I took 3 stops yesterday. I don't have a problem saying that because I stopped trading. Now, there was someone in the room who I coach who did not stop trading yesterday with 3 stops, and they buried themselves pretty well. Not necessary, right? There's why 3? Because I rarely have 3 stops in a row. As a matter of fact, I rarely have 2 stops in a row back to back, right? So when I get to 3 stops in a row, I know I'm done. Let's talk about that for a second. Am I happy about that? No. Do I like stopping trading when I've had 3 stops in a row? No. But they keep me from one essential thing, and that's blowing the daylights out of my account. And that's more important to me than anything else. And so I would recommend a similar program. Find what your line in the sand is and respect it. I had to learn some hard lessons before I did that. And it'll make all the difference in your trading. So moving on, today you can see we're opening up already above prior day's value. It's the first time that we've gotten above value in 1, 2, 3, 4, 5 days. We're due an up day. So am I willing to look for longs today? Yes is the answer to that question. I am willing to look for longs, right? I don't want to switch to getting short once we're already all the way down. We have not tested this area in the US session, and I'll watch for a trap right below prior day's low or into the support area or my intraday trading setups. But we are, as of now, above value and inside prior day's value. We need to get above, and particularly above prior day's value. So let me adjust this chart real quick. This is yesterday's chart. So this will end up looking like this. We're going to take this line, move it down here. We're going to take this line, move it up here. So that means yesterday's high. And this anomaly is a valid resistance area, by the way. So it goes to yellow. That's always tricky when the resistance is right above. You just got to know we're likely to reject out of there the first time in, and then we'll see what the price action says after that. All right? And then our prior day's point of control. So this moves down here. This moves down here. So this is prior day's point of control, which means it often provides choppy price action and is difficult to get a clean trade out of there. Sometimes it's clean, sometimes it's choppy as hell, and tends to cause a lot of stops. I prefer not to trade in this location. My closest support is down here at this 57.80 to 57.60, or getting above 59.40 opens this up to come back and fill this hole at 60.40 to 60.80. That's logical to me. The market likes to repair charts, and that's the logical place for the upside. To the downside, if you look and you scroll down, this is Dalton's gap fill right here at 56.80. You're likely to get a response out of that. There's a mid of a half gap. That is not as respected in CL as it is in other products. So word to the wise there, just be aware it's not always respected. And then you have a clean support level at 56 to 56.10 basically. And that's my next key area. Okay, so remember, if you're not trading around the anomalies, these anomalies give you a huge support area to get good trades, right? And to have trades set up. I don't always wait for those, and because of that, my risk increases when I take trades away from those areas. It's up to you to decide. I'm a very aggressive trader. It's up to you to decide whether you want to wait for a key support level to hit, or if you just want to trade the intraday setups, which have a higher failure rate. That's all there is to it. Pretty straightforward. So moving on. I would expect some kind of bounce, and there's 2 logical places to look to above. So CL likes to make 50-60 retraces. So from the high, that puts this whole neighborhood from 60-80, right, which is 60-90, let's call it, or 60-95, the 50 retrace, all the way back to 62-54, sets up potential area for key reversals, and then we go to, well, what's inside there to help us? Well, in front of that, we could just trade past this hole to the 50 retrace and reject. There's a volume build, as you can see right here. There's nothing on the TPO, but there is on the volume profile. There's a volume build there between 61.20, 61.40, and then I would be looking for a short between 62 and 62.20, and then finally this anomaly all the way back at 62.60 to 62.70. And depending on how the price action plays out, those are also upside targets, right? So remember, we may not always get the entry for the short and always get the entry for the long. If we plan those entries around key support resistance areas, along with the patterns that develop intraday, we have a significant edge. The only thing I'll say is, know how many times you're willing to take a setup one way or the other and go from there. I find it easier to break a swing first before you take a trade. You don't have to do it that way. I find it easier to skip the first half hour. A lot of people will say, well, it just doesn't matter. To me, it does. Mentally, I think it's harder. And so I'm going to skip the first half hour of trading in all indices. And I'll wait till after the first half hour to make my trading decisions. Just makes it easier on me. Doesn't mean I'm right or wrong. Just means I have an easier time setting it up, and that's a personality thing. Okay, so let's move to next. Oh, let me post this up for everybody in the room. There's the levels. You can see we came right into support overnight. See that? We finally got in there, and that's what generated the big reversal. So if I was going to write notes to myself and I was going to do it in a non-harsh critical way, I would say this. If I waited for the key area, I would not have had any stops yesterday, right? Now, I can point to many days where I don't wait for the key area and everything still works out just fine. Does that make sense? But in this case, I didn't wait for the key area and I ended up paying for it, right? So with stops, even though I had the setups I was looking for, I ended up paying with stops. Had I waited for the key area, I wouldn't have had a long, but I certainly wouldn't have had any stops and it would have made my day very different. You just have to make that choice depending on what type of trader you are, and that agonizes a lot of people, including myself. I've simply resolved it like this. I take the trades I take. I have 3 stops in a row, or which wasn't my max day stop yesterday because some of those were half size, but 3 stops in a row stops me for the day. I'm off or the market's off or we're both off, doesn't matter. Time out, get reset for the day. Okay, let me post this up to members here real quick. I think that covers the majority of our areas. So, and the green solid, we don't need this line. And we don't need this line. Don't know it's there, but we will eliminate it. This is top of an open window. That's Dalton's gap fill right there, 5680. And then we will just simply drag this down, edit. Or this is in a horrible place. Let's see if I can move this. There we go. Edit. Option P, and there are our levels. File. Save as. JPEG. CL 0114. Save, and if you look on the Slack channel, they will be posted there momentarily. Okay, there we go. Let's do ES really quickly. So if we look at ES, we have the different scenarios. So I want to compare and contrast these. See how on CL we're above value almost every day, and see how it's very hard to get below and hold below value. Okay, so see how this whole thing's just been grinding up. We get underneath value, right? The next day we close above value, and see how we're all of these, in all of these cases, we're above these values, not shifting lower. Does that make sense? And if it is, it's not shifting below swing lows, right? So look at that chart. Now look at your CL chart, right? There's the CL profile. So look here, we get this consolidation, we get underneath the value, and look how big that break is. That break changed things significantly, and look what got that rolling. First of all, value closed below value, and price closed below value. So that's one, so you know, because things tend to repeat in the market, right? So if we close below value and we close below value on a day, price closes below prior day's low, value closes below prior day's low and below prior day's value by necessity, right? Then you know things have changed, and you go, oh, hey, heads up. If we get below value here, we could actually cascade, and if you look, there was a big empty space in between there where we blew up the half gap and we blew up Dalton's gap fill, and ended up with a long liquidation. That was on news, right? That was back last Tuesday, right? We haven't gotten back above value until today. And even with that, when you look at reversals, what you want to see is both value close above, right? Value close above and price close above prior day's value. And that indicates that you have a type of trend reversal. You don't have to be Johnny on the spot to figure that out. And if you'll relax into it, you'll see multiple things change that'll let you know, hey, this is changing. I tried a little too hard to get a reversal yesterday without going back through, and the reason is simple. We've been in such a daily grinding up process that I haven't had to do any of this work. Like, when's the last time we had a check look? It's just been day after day of above value, right? I'm basically looking for good longs, and if I'm short, I'm covering quickly, right? So the game changed a little bit. Now I'm changing with it to not changing the process, but I am changing the outside parameters to understand what I'm looking at. Okay, let's keep going here. So let's get this fixed. So number one, let's move the how is it that I already fixed this chart? Hold on a second here. Did I do CL? Oh, I'm on ES, that's why. That's how it is. Sorry guys, brain lapse. Here we go, so let's fix this. So first of all, let's get new high from yesterday. All right. Prior day's low. Wow, that's tough. Let's do some adjustments here. Hold on a second. Gotta get some pinpoint accuracy in here, and that's what we'll do. We'll roll this up here. We'll roll are the points of control split again? Yes, they are. So it looks like this. That's the, oh, excuse me. That's the volume point of control. All the way upstairs. That's very weak. The TPO point of control is right here. We call that whole area TPO point of control. Again, light blue equals weak zones. Chop and or easily traded through. So I prefer not to trade there. Sucks when it happens like this. That's how it is. And then this is really the last anomaly down here with that volume build. So I'm going to put the support right there because there's a volume build. And we go from 2 timing to 1 timing. We'll just watch how it trades in there. It's not as strong as it normally is, but it's a valid support area. And then down here, we have a untested gap fill. So we're going to move this down to the volume point of control. Oops. Volume point of control. Down to, and we'll just do this whole thing. And that would also be a support area. It's junk, I mean, the whole thing is junk. We haven't auctioned very well at all the way up, but that's where those levels are. And then everything below is valid, right? So there's a hole in the profile here, but so now let's adjust everything a little bit. Put this to Monday's high. Okay. I guess I'm doing it this way. It doesn't make any sense, but that's fine. PSC. And let's just move these over. Easy enough. And that should be enough levels for us. Let's edit. Copy chart. Hey Victor, I sent you a text message. If you could drop that to me on either an email or in a on Skype, I'd appreciate it. And I've got to send you that file on Skype, by the way, just so you know. Okay, and then let's go to File, save as, yes, and there we go. And I will post that up on Slack. Tuesday. There you go, guys. We will do NQ and GC in just a moment. Okay, let's get that done. Is that really GC profile? It is. We'll do it in just a moment. Okay. So let's go see what we have to see, and then I'll do DC real quick. So number one on oil, right? So I want to go through something on oil because this is something that I cover with daily when we're trading, right? There's two ways to trade this. You can see it in ES, you can see it in NQ, so you can see it in CL. So so if we go through our process yesterday, right? The most conservative process, the one that keeps you from getting annihilated, right, is the 50-60 back after swing is broken. So remember, all you need is 1 or 2 good trades in a day to make your day, right? Heck, even in a week. So I want to show you something. We're going to go through the process. Now I got stopped. I'll show you. So I took the most aggressive stances, right? Yesterday, I took those stances. I took longs here, I believe. I took a long here. And I took a long, let's see, I took one more long. I believe I took a long here, and I believe I took a long here as well. So those 3 areas are almost at or near the low, right? There's no swing broken at all, okay? I was just playing pure aggression. That usually rewards me, and I'm comfortable with it, right? Why? Because I'm going to stop. But this did break down into a trend day down. You can see once we broke below this consolidation, it was odd. So we broke after just on US Open, and we went into it was slow motion. The number of bars that we're printing were really not very many. And I already had a kind of a preconceived notion that I was going to look to the edges and look for longs, right? Which I was right or wrong with. Now, go to the slightly less aggressive setup, right? So the slightly less aggressive setup, let me erase these really quick since I have time, since I'm not trading the first half hour, right, is wait to break a swing, okay? So you could have argued that I broke a swing here, but you didn't get a point of control above. We definitely broke a swing here, right? Swing is broken. Now, I'm going to show you the first method in staying up there is just going, hey, on the swing, on the 50-60 back, can I get an entry? Well, I got an entry and I would have gotten stopped there. That's cool. No problem. I'm going to show you why that matters, okay, and how it changes my day. So watch, I've got one stop in the bag at that point, okay, and I have no problem with that, right? But then I come over here and I clearly break another swing, right? I'm not even going to go into reading the waves. I'm not going to go into any other piece of information, right? And now I go, you know what? I'm looking for my first 50-60 back. Well, this, my friends, is my first 50-60 back. And you go, but Simon, it failed, right? You could do that. That's fine. I have no issue with it. You could say, Simon, it failed. And let's just say you took the most aggressive entry there, right there, at 58.26, okay? Well, it rolled up almost for a dime, right? Now, I'm not saying that's a fantastic trade, but on a day that sucked, you did get the response, right? I would have gotten stopped. I got to tell you, I'd have gotten stopped there too. It was just one of those days. There was no speed to the market, and I couldn't get my bounces. I'm telling you, I would have gotten stopped there. And in addition, you got to remember that what I really wanted to do, okay, so reimagine this. What I really wanted to do is get above, then come back like this, and then go. That's like if I had one best trade. Why? Because this got compromised, right? And this is really important from a coaching perspective. The best I was going to hope for, right, I broke the swing here. So I was going to hope that I would get a 50-60 back over here, which is exactly what happened. See that? So look how it traveled 50-60 to 50-60. It locked itself in and kind of formed a box, right? And just buyers weren't interested. This is normally pretty decent setup. You get that wave, you get this 50-60 back. This is the trade we made 50-60 ticks on Thursday, right? it just didn't work yesterday, right? And if it worked for a dime. But keep going. That would have. Let's say I didn't take the scale, and that's my second stop. So here's my third trade right over here. We break the swing, right? I'm going to do it one more time. Here it comes up. And now, oh, you know what? That's all the way over in Asia, so I apologize. I wouldn't have taken that. That was 1900. But you see the objective. You come into 58.07, it would have rolled up to 58.29, and the day would have ended up being mediocre. So what I ended up with there would have been 2 stops on the day instead of 3 stops following the process. I don't think either one made a big difference. I thought yesterday sucked no matter how you looked at it, unless you identified that it was trend day down. I failed to identify that it was trend day down, and it doesn't bother me in the least, right? So someday, okay, and so it's important to realize if you're a day trader, some days just go like that, right? Some days just swing like that. And the key behind all of that was this. All those trades took place in a vacuum, meaning if you come back over here, I already posted it up, I didn't have it, but this was all, there was no support at 80, and that's where we bounced out of last night, right? So it's putting together the pieces. Day support, intraday patterns, and then speed is the last one. I don't even know how to explain speed, but when there's not enough speed, you can't get the scales. It doesn't go, even on bounces, 10, 15, 20 cents easily. Those are hard-earned. And even this morning, looking at the pace, right, like I can just tell you, it's just slow, right? Like look at this morning. Look at what we're trading right now on, for example, if I pull NQ over, is it fast or is it slow? Well, if I pull NQ over, right, it's slow. I can tell it's slow. I don't need anyone to inform me of that. So this is 2 a.m. Look how far the rotation is working. This is 8:30 to 8:40. Look at the size of the rotation. And then ask yourself, do I want to trade that? I already know for a fact I don't make money in that. I don't make money when it's slow like that, so I'm going to lay back and wait till it does set me up, right? And everything I'm going to take is going to be scalp until I see the market fast. And Bill and I are working on getting an indicator to let us, so we can actually numerically measure that. And I think we may have it. He gave it to me. I need to download it and add it this morning, and I'm working on it. But I can tell you already this morning, it's relatively slow, right? I don't do well when it's slow. I do well when it's fast, right? So these are all elements that you have to know about yourself to help you become a better trader. So this morning, right, if you look, there's 2 ways to attack this, right? So see that, that's a big move off that 57, whatever this is, 66 here off the bottom last night, right? So I'm going to take a wild goose guess. I can draw this up right here. Okay, that's piece 1. Here's my fractal shift down, followed by fractal shift up. It's highly likely that this area, starting right here, down to here, which is 58.23 down to 58.11, right? So I'm going to say it again. It's 58.23 down to 58.11. It's highly likely that I get a response, and that response will probably go to the 50 retrace off of this low level, right? So, yeah, I'm willing to look in here. I'm not willing to take the trade until after 9 o'clock just. That's all. I want to make sure the U.S. session doesn't come in and do something stupid. This is a valid level. If you're willing to buy a contract in this level, you should find a response out of this level, but it's all the way down to 58.08. And you'll see we just came off. See how they came right to 58.23? And they just came off of it. It's just what they do, right? I can tell you right now, looking in the dome, there's liquidity at 58.16, and it's not uncommon to come and take out that 58.16. So if it digs deeper in, I'd be prepared to buy some more to look for the counter rotation back up. I'm waiting for my signals to set up, but this is a valid location in my opinion. Bill, if you have a different opinion, let me know, but that should garner a response of some sort back to the upside just all by itself. Okay, let's go look at gold really quick. Thank you, Bill. Let's go look at gold really quick since I have the profile here. And let's make sure I have the time settings right on this because I haven't charted gold in a little while. I do, and let's use I don't want to use the evening session on this. Okay. So let's erase all lines and just do a phantom outline on this really quick. Prior day's high, US session only. Remember, I only chart US session. US session low, poor low, we've broken that low. Inside day on top of that. Support, That's really your downside target. Prior days point of control, that's usually a chop area. Anomaly, that's valid. We need to adjust that for the volume build behind it. There we go. And unless something amazing happens, that should cover us for the most part. We just need to go look what's in the middle there. Top of an open window. So that's green dotted line. And Dalton's Gap fill. And there's a mid of a half gap there as well. It doesn't hold as well on commodities as it does on equities. So I would actually look for Dalton's Gap fill in that case. And I think that's sufficient enough for us. And then here's the swing high right now. I'll just throw it out there. And if we get above 1559, I'll worry about the chart up there. It's pretty good for the first day. I'm just going to make that a red color. I know that means it's a swing high. And let's duplicate chart. Chart analysis. Clean chart, chart settings. Oh, I don't think we need 3,000 days. Let's do 20. That'll be a little bit quicker. There we are, and that's today's chart. Those are the levels up and down, and I'll post those up to members. And this gold, do not rely on it for me. I'll teach you how to do it, but is not my priority. Getting this gold chart done. Let's see. And see how we bounced right out of that? 58.23 to 58.35. That's a dime to start your day. That's all you need sometimes. And there we are. So I don't know what to say. It's definitely slow. I don't like trading when it's super slow. Bill actually sent me, and I'll download it. Let me see if I can open this real quick in a second instance. And for that's going to conclude the market preview. So we'll go from there. I'll record it. I think buyers come back in and push back up the indexes because, duh, that's not a hard guess, right? So I'm looking for long setups until I see a change in character, and the pace is too slow for me to really want to do much of anything. And that's a choice I make relative to my trading. I know what I'm looking for, and I can wait patiently till I get it.